thought it was a pretty interesting day. Coming into the day, yesterday had, I think, an exceptionally strong spike early in the day, and then we went sideways for the rest of the day. So there was the possibility of trend resumption today. Sometimes you get a trend resumption trade that takes place over 2 days. So I thought with that much strong buying yesterday, there was a pretty good chance we would have some resumption today. And because of that, I chickened out of shorting below bar 1. Originally, I was going to short below there, but I decided top of the trading range, we could get a quick breakout pullback and then a resumption of yesterday's bull. If this bar was above yesterday's high, I probably would have shorted it. But within yesterday's range and just above the moving average, I took a chance and did not short it. I think it was a legitimate short. There was plenty of room to the moving average and to the to yesterday's close, but I was concerned about the strength of the rally yesterday. It was a very, very strong rally. Bar 2 went outside up, and it happened fairly quickly. I think if you were fast enough to buy above bar 1, it probably was okay. Bar 2 had a strong close. Now, a lot of traders shorted bar 1 because it was so perfect looking. So that means I'm sure there were lots of trapped bears. And then bar 2 is outside up. And whenever you have outside up and trapped bears, you normally get a second leg. And because of that, even though bar 3 is a good-looking bear inside bar, I did not want to short. This is interesting because normally in the first hour or so, if you have any signal bar setting up a reversal and the signal bar has a good body and not a doji, fairly reliable setup. But here we had 2 bars in a row where it did not work. Shorting below 1 didn't work, shorting below 3 didn't work, but buying above 1 did, and then buying above the bull bar in a few minutes did as well. So anyway, I didn't short in here. This is, I talked about this as a high 1, and I talk about this fairly often. For me to buy a high 1, I need 2 things. I need a clear bull trend, and this is probably clear enough. And I also need a strong bull spike. And a 1-bar bull spike is not strong enough. I want 2, 3, or 4 bars, not 1 bar. So because this did not meet both of those requirements, I wouldn't buy above here. I thought 6 was interesting. I wouldn't short below it because now we've had 2 above it because now trapped. We had the trapped shorts below 1. So I thought that, and we probably were going to have a second leg up after 2. So I did trade the breakout. Good looking entry bar, but look at the follow through. This isn't right. Why, if this is such a great bull trend, was there not a second strong bull bar? Instead, there's this little doji. I wouldn't short below it, but we get back to that high 1 argument. Okay, so 10 or 11 is a bull trend bar, but it's the 3rd bar after a 1-bar spike, and that is not good enough for me to call this a strong bull spike. So I personally would not buy the high 1 above 11. What about shorting below 12, a bear outside down bar? I think there's still too much up momentum for me to short. We have a pretty good spike with bar 8, and it might form a channel. But if we're going to form a channel, I want to buy at the bottom of bars, not at the top of bars. Arguably, you could buy above 13 as a high 2. But whenever I have 3 or more sideways bars, they're almost perfectly sideways, and the final one is a signal bar, and it's forcing me to buy within a tick or 2 of the top of the small trading range, I don't like to do it. I prefer not to do it. In some circumstances, I'll even sell on a limit order up there. But anyway, that's a high 2 that I didn't take. I think one of the hard things, hang on, let me go to bar 15. We got a small wedge, and I wouldn't take that either. We're in a tight trading range. To me, it looks like we're trying to form a bull channel after the bar 8 spike. So in a bull channel, I'm not shorting below bars. I'm not buying above bars. I'm doing the opposite. But I didn't buy up here either because I thought we were just too much sideways and not enough up. More reversals, more traps, one or two dumb things. I did a couple of dumb things today. 19, we had the small wedge up to, I guess, 15, and then this double topped with it and had a good bear reversal bar. Whenever you have a wedge and then a double top, that's a pretty reliable short signal. I think it's okay not to take it because we still could be in that bull channel working higher, trapping traders, shorting below bars. But that's one I probably should have taken, and I did not. And the market collapsed. Again, shorting below bear bars when you think the market is going down is a good thing. So shorting on a stop below 17 makes sense, and shorting below 12 makes sense. I got in late and shorted. I scalped. I should have swung, but a lot of times I do dumb things. 25 I think was interesting. You get the spike down to 21 and then a little parabolic move down to 24. So what about shorting below 25 as a low one short? I didn't do it because of the slight parabolic move and because the moving average was up so steeply through the morning. I wanted to short a second entry. Didn't get it. 28, you can argue two little legs down to a new low of the day. 20, and it's a two-bar reversal. I think that is an okay buy, but I think always in went down on either 20 or 21, and I don't think that this turns it up. So I think the market is still down. What about shorting? You got two up bars, 28 and 30. Here's a bear bar, 31. So technically that's a low two short. I think that this is fairly tight up in a little channel here. So I wouldn't short it just shy of the moving average. I would wait. 30 is a pretty good looking bull bar. Okay, now we got a higher low at 34, and it's a bull reversal bar. Just below the moving average, and this is that setup that I talk about fairly regularly. 3 or more sideways bars forcing you to buy at the top of a trading range. That's a trade that I don't take. I think 60 or 70% chance the market won't go very far, and then it'll at least pull back, maybe reverse. Here, get a little double top with 30. To me, it looks like the market could try to go up more, maybe up to the top of 25. So I didn't short the low two. Also, 35 didn't touch the moving average, but the market didn't care. 36, another attempt at a bull reversal bar, but again, buying above a small trading range just below the moving average. That's not ideal. I do think it's okay to short below 36. The market's made a couple attempts to go up, and it's failing in a little double top, possible bear flag. Then the market went down to a new low of the day. Third push down, I don't think it's a great looking wedge bull flag. There are way too many big bear bars, but it might be good enough to convince enough traders to start buying to at least lift the market a little bit. Low one short at 39. I'm not going to take that. It's at the bottom of a wedge, still above yesterday's close. Second attempt to reverse the low of the day. To me, that looks like a low one in a doji signal bar. Those are all bad things for people looking to short a low one here, so I wouldn't trade it. Okay, you got the II at 42 and a wedge bull flag. I do think that is an acceptable buy. I think it's interesting at 45. Arguably 3 pushes up, 40, 43, and 45, and a breakout test of the 35 low. But that's a pretty good looking bar, and the market may try to form a higher low after the wedge bull flag, so I didn't short. Market tried to form a higher low at 48 and failed. Tried again at 50. I would not buy 50 because the market's been down for about 6 bars, so that's too much of a bear channel for me to buy the first attempt up, and instead the market reversed down into a breakout pullback short below 50, and I didn't take it because the market may bottom just a few ticks below 40 and get another more convincing wedge bull flag.